Hello, hi everyone. My name is Louis from Intrinsic Knowledge. Welcome to my channel, and in this video, I'll be sharing how we could confidently invest in S&P 500 and exponential ROI. Okay, as below, what I have structured. Number 1, why invest in S&P 500? Number 2, we will be using simple technical analysis for entry and exit our positions. And number 3, option trading, backtesting our method using the broker platform Think and Swim. Okay, and lastly, please watch the video till the end as I'll be sharing the criteria and the amazing result. Alright, cool. So before we start, please have a quick read for this disclaimer. Thank you. Okay, so why invest in S&P 500? From this article, Warren Buffett actually recommended S&P 500 is one of the best long-term investment. And because S&P 500 contains some of the strongest company in the country, in addition, is more likely to recover from crashes than some other types of investment. Okay, so from this chart, you can actually see that S&P 500 should actually average out around 10% per year. Alright, cool. Okay, next, we'll be using this free website, tradingview.com, for our technical analysis. Okay, the ticker symbol for S&P 500 is SPY. We are in the weekly time frame, and there'll be one indicators that we'll be using is the 50 weekly moving average, which is this red line. Okay, so actually a random pick way back to 29 on the week of 29 of May 2012, whereby the red candlestick touched the weekly 50 moving average. Okay, so this will start off with our first trade. So whenever the red candle touch the 50 weekly moving average, we'll have an entry. So overall, so far until today, there's actually 6 entries. I'll be sharing all the criteria at the last slide. Alright, cool. Okay, now we are using the broker platform Think or Swim for our options tradings and to backtesting our method. Okay, so you should go to analyze and then think back. Then we can key in the ticker symbol for S&P 500, which is SPY, and we'll be in this page. So if let's say you still remember our first candlestick, which is on the 29th of May, on the week of 29th of May 2012. So the candlestick is actually a weekly candlestick. So the candle closed on the 1st of June. Alright, so you can see that right now we are actually on the 1st of June, and the price of S&P 500, and we go to the last step, which is the longest expiration date, and we'll choose a strike price, the longer expiration date, and you click here to buy a call. So you can see the premium you need to pay for one contract, which is $13.92. You need to times 100. Alright, so you can see that actually I have put in all the records here already. So all the candle touches the 50 weekly moving average, we will have an entry. Alright, so let's go to the last slide. Okay, so this will be the final slide to discuss all the criteria. Okay, number 1, you must have the convictions in S&P 500. Right, I suppose you should have right now. Okay, number 2, based on our first trade, which is on the week of 29th of May 2012. Whenever SPY, the red candles, touches the 50 weekly moving average, you should actually close the positions and open new contract with the longest expiration date, which is what I have done on the spreadsheet here. But there's on one condition whereby the re-entry of the SPY position should at least more than 1 year. So we want it to be at least more than 1 year based on the backtesting method. Okay, so number 3, if let's say S&P 500 did not touch the weekly moving average, so you just have to roll over 1 month before the expiration date. So you just close and open a new contract before 1 month before the expiration date. Okay, and lastly, this is we wanted to reinvest, compounding effort, to reinvest all the funds again. So for example here, the amount that actually you profit, you just roll over, just reinvest. Okay, so you can actually see that actually based on the spreadsheet here, the first entry, then the second entry touches more than 1 year, I'll close it and reopen again. Then the third entry, close it, open again. So okay, you can see that on the fourth trade actually we are making some minor losses. You need to refer back to the first criteria, which is convictions. So reinvest again, and the monster trade is actually on the last trade, whereby you can see that from 246,000 all the way to more than 1 million actually as of 2nd of July. So this trade is still open, okay, considering. And if let's say you do not want to use TA and options, you're actually based on just invest initial of 10,000. You can see that based on the initial price, which is $128, and right now if let's say we base on 2nd of July 2021, $433, your profit is around 3x. So if let's say you use technical analysis and option trading, the ROI is quite significant. It looks like almost 100x. Alright, cool. Okay guys, if let's say you like my videos content, please share with your friends, and I like to hear your comments and suggestions. So I see you in the next video. Cheers.